In this video, I will reveal this month's biggest risers and fallers in the FTSE 100 and all the upcoming key dividend dates that you need to know about. This is not financial advice, so please do your own research. So, who are the biggest risers in the FTSE this month? At number 5 is Berkeley Group. Berkeley shares are up over 9%. The company specialises in high-end developments in London and South East and are often seen as the bellwether for the health of the UK property market. They produced a very respectable set of results, with pre-tax profits rising 26% in the 6 months to the end of October. Sales revenue surged 36% compared to last year. At number 4, up 9.6% this month, is St James's Place, a British multinational wealth management business. The company could benefit from the rising demand for wealth management services across the UK. As the cost of maintaining such a business grows, smaller establishments are pulling out. This company has the size and scale to fill the gaps left by its competitors. At number 3, up 10.1%, is Ferguson, a British multinational plumbing and heating products distributor. Rising house builder activity, a booming home repairs, maintenance and improvement market, and a bounce back in commercial construction activity have accelerated revenue growth. Organic sales were up 24%, which beat analysts' expectations. At number 2 is BHP, up 10.3%. BHP is an Anglo-Australian mining, metals and petroleum company. Despite tough challenges at the moment, demand for its broad range of commodities could soar as infrastructure and housing investment steps up across the globe. And just before I reveal this month's highest riser, you may want to consider subscribing and turning on the notification bell so you don't miss out on any future market updates. And the highest riser this month, up 11%, is Taylor Wimpey, one of the UK's largest house builders. The current demand for new homes is huge, and the government has committed to doing everything it can to boost the numbers. Low interest rates and schemes to help people get onto the property market will help to further boost the fortunes of this company. And now for the FTSE 100's biggest fallers this month. At number 5 is retailer JD Sports, down nearly 9%. The company has had a very tough month. Firstly, there have been battles with the Competition and Markets Authority over the acquisition of Foot Locker. Secondly is the Omicron variant and worries about lower footfall in the high street. At number 4, down over 9%, is Ocado. Last year it reported a pre-tax loss of £70 million. It has been investing heavily to expand the business, and the costs of doing this are spooking shareholders. At number 3, down nearly 11%, is Entain, an international sports betting and gambling company. Earlier in the year, there was speculation that another company called DraftKings was proposing an offer for the company. This caused the share price to rally, but a month later, DraftKings said it no longer intended to make an offer to buy the company. The stock has almost been in free fall ever since. It's not all bad news, however. The lower stock price now could be seen as a bargain to some investors. Entain owns Ladbrokes and Coral among many others, and the company is growing significantly online. City analysts predict impressive growth for 2022. Be careful, however, as this sector is always open to tighter regulation. At number 2 is RollsRoyce, down 11%. It's fair to say that RollsRoyce has been significantly impacted by COVID concerns, and this continues to be the case. Airline bookings have fallen, and investors worry about what this means for the company due to its large business manufacturing and servicing aircraft engines. It's not all bad news, however, as the company's business in space and defence have proven to be fairly resilient and its cash flow position has improved. Some may see Rolls-Royce as a bargain at the moment. And the biggest faller, down 11.2%, is the Prudential. Net income has shrunk at a rate of 8.3% over the past 5 years. Most of the company's profits are being paid to shareholders rather than being reinvested back into the company, so concerns about earnings growth have been worrying shareholders. Now for the ex-dividend dates for the month ahead. If you purchase a share on its ex-dividend date or after, you will not receive the dividend. Instead, the seller gets the dividend. If you purchase the share before the ex-dividend date, you will receive the dividend. There are 7 FTSE 100 companies going ex-dividend in January: Aviva Group, Auto Trader, Experian, SSE, Sage, Ashtead and Compass Group. In the final column, you can see when the dividends are being paid. So for example, Aviva Group pays you 13 pence per share on the 4th of February if you own the shares before the ex-dividend date of the 6th of January. And now for the dividend payment dates. 15 companies are paying out this January if you bought their shares before the ex-dividend dates. These are British Land, Bunzl, Electro Components, which recently has been promoted to the FTSE 100, British Land, Severn Trent, Intermediate Capital, 3i Group, Royal Mail, GSK, Associated British Foods, B&M Retail, Evraz, National Grid, Auto Trader and Burberry. Will you be receiving dividends from any of these companies? Let us know. And please give a thumbs up if you found this useful and consider subscribing for more market news as soon as I make it.